What's up, good people? Hopefully, everybody is doing okay. Everybody is alright. It's on a Thursday today, so I want us to be looking at these prices and I want us to learn something from these charts. So, what I'll be doing is yesterday was on Wednesday. I never did my trade reviews, so what I'll be doing my trade review over this video and also try to analyze what I am expecting on this Thursday, right? So hopefully you're gonna be around. Hopefully, uh, we'll get to know what happened yesterday and also what gonna be happening today. So first of all, I'd like to start from the 4 hour time frame. And yesterday, as I was analyzing my price, what I did see is we had this huge drop down. You can see this huge drop down on Tuesday during the CPI news. You can see it dropped heavily. Also over here we had this candle, so it created a fair value gap over there, right? And you can see how over here it was consolidating. Also yesterday kind of consolidated, never had huge moves, but it consolidated around here. So yesterday I had seen this huge drop down, I'd seen this 4 hour fair value gap, also this 4 hour fair value gap. So what I wanted to see is a rally higher into this 4 hour fair value gap, then from which we can see if the market will be continuing to the downside, because from the previous videos I've been telling you that I'm expecting price to go to this discount level over here. So as I rallied to the 3 hour time frame, what I did see is I saw this liquidity that was being engineered over here. I saw the liquidity below these lows had been engaged with this candles wick. Let me make it wider so you can see the liquidity is above over here, right? We had liquidity below that had been engaged over here, and to me I'll drop lower and tell you what I did see. So back to the 1 hour time frame, because there was nothing really much. So what I did see is, see how liquidity was being engineered above, but below here we had the lows being taken by this low. Okay, again we had this low clear these other lows, right? So after I'd seen these liquidity runs, you can see these lows had been grabbed. The liquidity below had been grabbed with this candles wick. Below this low also liquidity was there that was grabbed by this movement lower during New York, during London, I mean. So after I identified these, to me, what I did see, I was expecting a continuation higher during London, because during New York, a continuation higher during New York, and because London had created this law, I wanted to see this law maintain, right? So later on, I want to tell you how I did interpret this price over here, and how I did take these two trades over here that ended up to be losses, right? So over here I'd seen these liquidity grab and then market rallied higher. One thing I've always said, the first move is usually a fake move, right? Let's wait for the second move after liquidity has been engaged. So that's what I really wasn't keen on. Um, I thought that the market would rally higher, but I didn't. I wasn't really keen with the first move to be usually a fake out, right? So after I'd seen these, I knew that the market will be rallying higher. So I dropped down to the 30 minutes time frame, and what I did spot is, so at first I had spotted this inversion fair value gap over here, right? I'd spotted this inversion fair value gap over here, this candle slow, and also this candles high. We have this fair value gap over here, which I wanted to see it support price higher, right? And Afterwards, you can see I have two trades here. One, my entry was a little bit higher. The other one, my entry was a little bit lower. So after I entered this trade based on this 1 hour inversion fair value gap, but as I had dropped lower, I spotted another 15 minutes inversion fair value gap. This candle's low and this candle's high, but this one was more favorable because it discounted. Remember, as I have always say, is never buy in premium. I made a mistake by entering this trade earlier in premium, but if we are buy, let's enter inside discount, right? So I did enter this first trade in premium, then I realized I made a mistake, then I dropped. I waited for price to drop at this 15 minutes inversion fair value gap that was in discount. I was tapped in. I thought the market was rallying. As you can see, it was respecting these 15 minutes fair value gap. Over, let me widen it. You can see these lows, these candles respecting the midpoint of this 15 minutes inversion fair value gap. We had this rally higher, and also this candle respected this 1 hour inversion fair value gap by closing above. So I thought everything is okay, but later on everything reversed on me. Cleared these liquidities below the low, below this low. Then you can see how the market now started to rally higher after it had engaged me. After I have been taken out, then the market rallied nearly tapped to this TP, but you can see this consolidation over here, right? So this was my trade yesterday, and it was against the trend because remember I want to be selling to discount levels inside this red zone. I want to be selling, but still we are in premium, right? And in these situations the market can for instance, you can see this huge drop from this level, this sharp drop. We can expect the market to retrace inside this zone, right? Because we have imbalances and we have liquidities being engineered over here. We can expect the market to rally over here, from which we can anticipate also to see a rally lower, right, to our discount. So that was my trade analogy yesterday, but mistakes I made is the mistake I made is I entered my trade inside premium, right? The first trade, but the second trade, I guess everything was right for me because I had entered my trade in discount and wanted to see the market buy. But what happened? And the price action to me was clean, then sharply rallied lower, took me out, which is usually expected or which is normal. Then the market continued to the side I had wanted to see it deliver to. So yeah, and that's what happened. And today, yeah, that's what happened today. So I'll pause for a minute, then I'll be back to talk about today's expectations. So in a few minutes, I'm gonna be back. Okay, so I'm back again. So I'll get rid of all these because we are done with that. And I want us to talk about today what I am expecting over here. So shortly, yeah, I'll not get rid of this for February gap. So what I'll do is I'll start from the higher time frame, and over here the 3 hour time frame. Over here now, what's the daily or the 4 hour time frame showing us? So from the daily time frame is we've seen liquidity that was being engineered over here has been cleared. Then we can see this candle bullish, heavy bullish candle that closed above the previous candle's high over here. Then you can see these price action over here, and the last down close candle acting as an order block which has been engaged, right? So let me use can I use that? Let me use this tool, rectangle, and put on this level here. So I change the color and label that as my 4-hour order block. And now put it, ensure that the open, yep, exactly, all right, also there, and also ensure that it's in the range. All right, so that's our 4-hour order block, and you can see that as the midpoint was hasn't been tapped into, but you can see how that candle dipped into that daily order block, the 4-hour order block, I mean, then lose strength. Then you can see the other bullish candle that rallied bullish. So into the 3-hour time frame, what you can see is also over here, this dipped into this 4-hour order block, right? Then you can see the reaction of that order block from yesterday. We had this swing high being created. Also, I've noticed the 4-hour time frame, we have this swing low, which to me, I'm expecting to see this swing low remain intact, right? Want to see this swing low remain intact. So I am not expecting to see candle closing or candle going much further lower to this level. So we have also this 4-hour fair value gap above, paired also with a 3-hour fair value gap. So this 3-hour fair value gap is too huge. So these candles high with these candles low, we have this whole fair value gap there, but we usually target a 1 to 2. So yeah, so you can see inside the 3-hour time frame, the liquidities had been engaged over here. Also, the liquidities that were created above had been engaged. You can see how these candles were respecting the 4-hour order block by closing and opening above the midpoint. Now we go to the 2-hour time frame and see what happened. So we have this low and this high. Let's see whether the market had dipped to discount and then continue buying. So because I love seeing premium discount key levels being respected. So over here the market had dipped into it shallowly, then dropped inside this for order block, then rallied higher. So we'll try to see if there will be anything that might drive this market lower because remember, as I've always told you, that the first move is usually a fake move. Maybe to someone who had seen a reaction of this order block, maybe seen this an opportunity to go bullish, this is the first move, then you can see a drop lower, right? But since today is on Thursday has started with this candle, you can see this is the first move of Thursday higher. So we want to see if we can see anything below here, either liquidities, you can see liquidity, these lows liquidities, or imbalances that might make the market rally lower, from which we can be expecting to be buying from. So what I'll do, let me move this to the left and make it as small as possible. Yeah, exactly on the low. Is that on the low really? Yeah, from the low to the high. So inside the 2-hour, we are not seeing something that might drive the market lower, but inside this price action over here, we can see we have this kind of consolidation. We have Asia lows, right? We have this Asia lows, and we have a lows here, which creates a kind of equal lows. These lows with these lows, we have relative equal lows. Let me move this onto the side. Yeah, and also make this order block, not this. Yeah, so as you can see from the 1 hour time frame, you can see we have this drop lower, we have this move, which can be a fake move because we have liquidities over here that are you can see in discount, right? So inside the 30 minutes time frame, we have this fair value gap. So I don't know whether I'll make this chart dirty for you guys, but that's what I'm seeing. So over here I'm seeing this 30 minutes fair value gap, 30 minutes fair value gap. Yeah, so that 30 minutes fair value gap with these relatively equal lows, that is the Asian lows. As you can see, yeah, Asia starts from 20, I guess, to midnight. So midnight is over here. So we have these Asia. Let me put it there. This Asia range that ranges from 8 in the evening to noon. So I'll place this as there, so we'll be knowing this is our Asia range. So the Asia lows are here, Asia highs have already been triggered. So Asia low paired with these other 30 minutes fair value gap, and let's see from the 15 minutes whether below that 30 minutes we have any imbalance. So inside the 15 minutes time frame, we don't have anything but a slight fair value gap, a small fair value gap from this candle's low to this candle's high. You can see we have a small gap there, a minute gap. If you can see, these wicks are not overlapping, so we have that low, and also we have these high. So you can see we have the lows are not overlapping, or the wicks are not overlapping. So that's a fair value gap, a 15 minutes fair value gap there. Let me make them heavy so that yeah, so we have that 15 minutes fair value gap, and probably 5 minutes. Everything below is balanced inside the 5 minutes fair, inside the 5 minutes. And this candle's high is above this level over here. Watch these numbers change. So this candle's high is at 1986.785. This candle's low is 800. So 1986.800, whereas this is at 785. So have they overlapped really? Let's see. They have have not overlapped. You can see there's a gap there, so we have also a small gap there inside the 5 minutes time frame. But so yeah, if we'll be seeing the market retrace, so this is the level I'll be watching the market to be buying from. But also the fair value gap that I've talked about, the 5 minutes fair value gap, we should also not forget about it. We should also include it because it is there, right? We should not assume anything at all. So over here we also have a 3 minutes fair value gap, right? So that's why I like navigating through everything. So below here we have this low. Now let me make that small. Also this candle's high. We have that 3 minutes fair value gap. I guess will it be paired with that 5 minutes? So it's in that range, right? And also we have this 5 minutes order block. So the fastest I could like to see this market, I maybe dipped into this level. Maybe we'll be patient to see if it will dip into this level, then buy off, or what, or something else might be happening. So it's a matter of watching and seeing what these prices will be doing, right? So remember, this is the Asia range. Let me put the highs there, and specifically at 8. So this is the Asia. We have drivers of the market. We have this 30 minutes fair value gap. We have slightly below this for our order block, right? And then we have this 3 minutes fair value gap paired with this 15 minutes fair value gap. So I'll make it also minute so that our charts will remain clean. But let me label one as 15 minutes FVG low. Ensure that we have that at the bottom. Yeah, exactly. Also this one, 3 minutes FVG low. Ensure it's at the bottom. Yeah, exactly. So we'll be watching this price action over here and see if we might catch a move that will propel us either way. So for my anticipation, because I'm thinking this to be a fake move, I'm expecting to see maybe a long wick lower, a wick come rally lower, tap into this key level, this 30 minutes fair value gap, then maybe anticipate a move higher. So what I'll be doing is we'll have to measure the high to the low of this price leg. So using this tool, so that low, so I want to use this price leg from this candle's high to this low to distinguish where the premium discount levels are. So also this, so I'll get rid of some stuffs over here that might be making these charts dirty. So delete everything above. Also this trade, yeah, so using that high, this high, exactly. Now we have this price leg from the high to the low. You can see over here this red line is the liquidity we were targeting, right? so the previous low, and above this previous low, let me push this. Yeah, so from the high, from this swing high to this swing low, so we have the equilibrium there, we have premium, then we have premium in the green zone, we have discount. So where can this price is push to? So inside this 1 hour fair value gap, then maybe look for a continuations lower to these discount levels that I've been talking about over here, this green zone, this red zone. So I want us to I'll go to the economic calendar to see whether we will be having some news. So shortly I'll be back with the economic calendar, guys. So I'm back over here. Today is on Thursday. You can see we have news at around 8:30. We have core retail sales, we have Empire. So we have for red high impact news, unemployment claim also, and at 9:15 we have this industrial production, and at FOMC will be speaking in the evening, but it's a medium impact. So I guess at around 8:30 to 9:15 we have some news. So let's prepare. So at around 8:30 let's prepare and see what might be happening. So what we'll do is we'll be careful on in reading these price action, but what I'll be expecting by then, I want to see if I see a drop lower. This is what I will be anticipating, maybe a drop, or my phone is about to die, so let me out over there. So what I'm expecting to see is this long from maybe this midpoint of this 30 minutes fair value gap, maybe with my SL below the low. So yeah, I target 1 to 2. Yeah, so not even I'll be giving my trades some gap, to not exactly on the low. So because you can see yesterday I was taken out because I had my stop loss below here. If maybe I had given it some room, then my trade would be valid, right? So I'll give also this trade a breathing some gap there, then expect where is that, yeah, above, because I want to see it go to these premium levels above this equilibrium. So I'll ensure that I have I want to do inside that price range. So this is what I'll be expecting, guys. So this will be the trade for me today. So let's wait and see in the evening what we might be expecting. So whether we'll be tapped in, whether the market will do otherwise. So let's wait and see what will probably be happening. So thank you for watching this video. Hopefully I'll be seeing you in the evening to check on our trade review. So that is it for today, guys. See you later.